DoorDash stock is up over 25% in 2025, and investors are asking me, what about 2026? Is DoorDash in a buying opportunity for 2026? I'll answer that question in this video by looking at the company's longer-term prospects on revenue, on cash flow, on returns on invested capital, and I'll reveal my fair value calculation for DoorDash to highlight what I believe is a fair price for this stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Let's start with revenue growth, where DoorDash has demonstrated excellent performance, increasing from $300 million in revenue in 2018 all the way up to $12.6 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 75% in that time. If you were like me, you were surprised at how explosive DoorDash's growth has been, even after the economic reopening. I was surprised. Now, during the pandemic lockdown stages, when restaurants were closed and people were forced to stay at home, I understood the growth of DoorDash very well. I was expecting food delivery companies to thrive during that moment, but I've been surprised at how persistent that growth has been, even after the economic reopening, and that goes to show how much people are willing to pay for convenience. And I've been talking about this across the board for all of the companies that I follow that offer convenience. Consumers have been willing to pay for that feature. Even if it might seem expensive, people are willing to pay that extra $10 or whatever the fee might be to get their burrito delivered to their home instead of having to leave their home, go to Chipotle or whatever their favorite restaurant and pick up the food or eat at the restaurant. People would much rather order the food and have it be delivered to their homes. And that's what companies like DoorDash have demonstrated over the years. I don't expect this will end anytime soon. That trend, that tailwind of offering convenience is only increasing as DoorDash is signing up more merchants and more restaurants, making the app that much more valuable. If you can find all of your favorite restaurants on the platform, you're more likely to go to the platform when you're interested in having some food that you're not interested in cooking or preparing. Now, DoorDash has also been able to do this while improving the profitability of the business overall. The returns on invested capital have improved from negative 44% in 2020 all the way up to positive 9.4% in the most recent trailing 12-month period. I've been highlighting the same business model benefit that Lyft and Uber benefit from, so does DoorDash. And that is the drivers are bringing the assets to the platform. DoorDash doesn't own any of the vehicles on the platform, but drivers that are bringing and making those deliveries, they're the ones that are adding these assets and allowing DoorDash to benefit from those assets. Similarly, on the other side of the equation, DoorDash doesn't own or operate any of the restaurants or stores that are offering products and services on the platform. So DoorDash gets to bring together all of these assets, all of these entrepreneurs, all of these products and services onto the platform without actually investing any capital for those products and services. That's what I call an asset-light business model, one that is very attractive for investors because it allows the company to benefit from large capital investments without making those investments themselves. I also like to look at the cash flow from operations to sales ratio. And for growth stocks like DoorDash, it's especially important. It demonstrates to investors that it's a self-sustaining business and you no longer need to raise capital. And DoorDash has been comfortably cash flow positive since 2020, with the ratio increasing from 8.7% to 20% in the most recent trailing 12-month period. And again, the asset-light business model allows the company to generate positive cash flow because it's not investing in the working capital in the assets to generate these revenues. So now let's take a look at valuation. And according to my proprietary discounted cash flow model, DoorDash stock, I calculated a fair value at $218 per share. The current market price is $207. So applying a margin of safety, $209, as I'm recording it, the stock price is moving higher. My formulas here in my discounted cash flow valuation spreadsheets have several embedded formulas, including the one for the current market price, which updates during market hours. And that's what you saw here as I was recording. So even accounting for a margin of safety, the stock looks fairly valued because the difference between the market price and intrinsic value is less than 10% difference. And then when I go back to fiscal.ai, which is where I've been getting all these charts, and you can see their link in the description if you're interested in their services, you'll get a 15% discount for using my link. And I look at the forward price to earnings at 34 and the forward price to operating cash flow of 22. I think these valuations are attractive for a company that's growing as quickly as DoorDash, with the total addressable market opportunity in above trillion, possibly multiple trillions of dollars. If you think about all of the spending that happens on people purchasing food at restaurants and people purchasing from convenience and other locations that need or perishable items that you would like to see fast delivery, the opportunity is massive for DoorDash, with positive cash flow from operations, being the number one provider in these services in the United States, at least with an estimated 60 to 70% market share. I think all of that is an attractive business that you can get for these valuations. So I will be rating DoorDash stock as a buy. You can see in my spreadsheet, I upgraded the stock, or I rated the stock as a buy, and I updated that today, December 2nd. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.